What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I want to talk a little bit about why I invest, what got me started, what my intentions are, how my strategies have evolved and changed, and I have had to readjust over the years. And I want to go through absolutely everything. But as always, just in case you're new, make sure to subscribe for a bunch of videos. Subscribe to my second channel, which is my backup channel, for even more videos. Get yourself some DYDSS merchandise to help support the channel. Try some G Fuel energy formula. This is going to be the flavor of the month for May. Bahama Mama, $5 off first order by clicking the link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. They got a promo going on right now. For every friend you refer, they're going to give you 6 spins on the Webull wheel. Every single spin wins you at least a couple dollars worth of free Apple stock. You might win all the way up to $3,000 per spin. Remember, you get 6 spins. $3,000 times 6 potentially, or $3 times 6, or maybe $3, maybe $100, maybe $12, maybe $10. It's completely random. Whatever you get is what you get. You get what you get, and you don't get upset. Link in the description. Promo ends on the 25th, so you only have about 4 days left. All right, so let me get this energy formula out of the tree. Let's get to walking. Probably going to be a lengthy video again, as it was a couple weeks back. Came out here after work, decided to hit record and say what I wanted to say without looking at how long the video was going on for, and it turned out to be over an hour. So anyway, today I wanted to talk about why I invest. And I figured, for the sake of making sure everything makes sense, it's probably a good idea to start off, or to lead with, how I got started investing. Now, funny enough, before I had started investing, toward the end of 2019, by the way, before then, back in 2018, 2017, 2016, back in the day, a group of friends and I used to go to Applebee's. I think maybe once or twice a month. Forget if it was Friday night or Saturday night or whatever it was. But every now and then, we'd go to Applebee's, meet up, and we would treat it like a mastermind session, because this guy right here, I've always focused on the more branding side of things: sales, marketing, brand building, business consulting. That's kind of my thing. That's my avenue. That's where I excel. That's what I'm good at. In another seat, we would have my friend Roberto. Roberto was the stock market guy. He has seen quite a bit of success in the stock market over the years. He's older than I am, and he actually got started out when he was like 16, I think. A certain family member said, "Hey, take your own money." They pointed him in a couple different directions. They said, "Put some money here, put some money here, put some money here." He did just that. As he got older, he kept on investing, did some research, and went off on his own, in his own direction, and he has seen quite a bit of success. And then in the third chair, there would be Antonio. Antonio's the real estate guy. He knows just about everything there is to know about real estate. He is not really so much of a buy and hold real estate type of investor. He doesn't really buy rental properties necessarily. That's not what his interest is. That's what my interest is, if and when I'm ever able to get into real estate. But he flips houses. That's what he does. And he's based here in New Jersey. He has flown all over the place. Checks out properties in Texas, checks out properties in Florida. He's all over the place. So you put the three of us together, makes for pretty good conversations. And I would imagine the people sitting at the table next to us during any of those mastermind sessions probably learned a thing or two. And I'm willing to bet that their financial IQ raised by at least 1 point. I would hope. But I remember way back in the day, during these Applebee days, I remember saying to my friend Rob, the stock market guy, I told him, I know absolutely nothing about the stock market. It makes no sense to me. I don't get it. I've tried to get it. I don't get it. It's like a different language. What do these charts mean? How do I know if a stock's going to go up or down? How do I evaluate or analyze? Like, how do I do anything? I don't get it. I don't understand. Makes absolutely no sense to me. And guess what? That's where every single person in the world is at on day one of becoming interested in stocks. They're like, all right, first things first. What the heck is going on here? First things first. I don't understand, but I need to understand. How you doing? Is that the top G? I don't know. Where was I? Oh yeah. Nobody gets it. Nobody understands. It's not one of those things where you can just look at it and be like, oh yeah, this makes perfect sense. No. There's a lot of charts and graphs and numbers, earnings reports, the general state of the economy, geopolitical conflict, whatever the clown in the White House is up to, whatever that clown may be. If it's a clown on the left or a clown on the right, they're a clown either way, and they're going to screw things up no matter what. What is that guy going to do? Is he going to cause a whole bunch of problems? Is he going to make, half the country hate the other half of the country and vice versa? And there's going to be all this, on the brink of another civil war? Or is it going to be somebody that's going to raise taxes and cause inflation and cause all these other types of, financial problems? Like, what's going to go on? All those things play a role, believe it or not, in the stock market and the general state of the economy and all of that. What these politicians are up to. And I remember I told my friend Rob that night at Applebee's, I was like, I don't get it. I want to get it. One of these days you're going to have to explain it to me. I want to understand. I want to invest at some point. I guess you can say I was borderline procrastinating at the time because I wanted to learn, but I didn't want to learn bad enough to actually take the time to understand back then. And I remember saying to him, when I do finally get started, I want to buy Tesla stock. That's what I said back in 2016 or 17 or whatever it was. I was like, I have no idea what's going on when it comes to the stock market, but at some point in my life, I want to buy Tesla stock. That's what I said. Sure enough, toward the end of 2019, I think September of 2019, I opened up my first account with an investing app. Now I use a couple different investing apps, and one of the few that I use, like I said before in the intro, Webull. It's free to use, free to download, free to invest, and if you need a referral link, I'll leave it in the description. You'll get up to 12 free fractional shares just for downloading and funding your account. And then beyond that, hi, how are you? And then beyond that, if you refer a friend on your own, you get those 6 spins on the Webull wheel. Promo ends on the 25th, so please move fast. Link in the description. But I downloaded my first investing app, September of 2019. And I remember looking at the platform for the first time and saying, all right, what the heck is going on here? I don't understand. This makes no sense. What is that graph? What is that chart? What are these numbers? And I remember looking up a couple companies I was familiar with. Ford, Coca-Cola, Apple, Tesla, Starbucks. I was looking at, companies that everybody knows, household names that everyone's familiar with. And I was like, hey, I know what that means. They sell coffee. Hey, I know them. They sell soda. Nike, okay, hey, yeah, they sell sneakers. And then I'd look, and I was like, what in the world? Made no sense. So I spent the rest of that year studying, dabbling, very little, just trying to, just getting my feet in the water, trying to understand what's going on, get a feel for what it's like to begin investing. At the time, I had no ability to analyze. There was no technical analysis, fundamental analysis, or really any strategy at all going into some of the decisions that I made. Fortunately for me, a majority of those decisions where no strategy was involved turned out just fine. Some of which have gone up a little. A few have gone up quite a bit. Very few didn't do so well. But it is what it is. I wasn't throwing hundreds or thousands of dollars in. I was just dabbling, like I said. I was just trying to form an understanding of how to get the hang of this. Moving on into 2020, I began to get a little bit more comfortable. I started to understand a little bit more of what was going on. I started to understand what type of investor I am. Because at the time, I didn't know that there were different types of investors. I didn't know that there were different approaches you can take. I thought the approach was, hey, where can I put my money to make the most money? Which I guess, now that I'm saying it, now that I'm wording it like that, that is pretty much the approach to investing. Where can I put my money so that it turns into maximum amounts of gains and profits? But there are a couple different ways you can go. You can take the passive income approach. You could take the speculative growth stock approach. You could take a short-term approach, a long-term approach. You can buy in, preferably low, cash out, preferably high, and then take all those gains, that newfound currency on top of the currency you put in, and buy into the next thing, preferably low, so that you can cash out preferably high, and rinse and repeat. I don't do that. That's a little bit too hands-on for me. I'm not like those guys. I don't have the time to constantly be looking for the next big thing. I like to take the more hands-off approach, which is why I was initially drawn to the passive income approach, the dividend income investing approach. And originally, I was doing this with dividend stocks. I was finding what I believed were the most quality companies that pay an appetizing dividend, companies that were still innovating, still had room to grow, because you don't want to just throw your dollar bills into something that's promising to pay you a certain dividend yield. Like, oh wow, 5%. 5% dividend yield, not bad. Not bad at all. I'm in. Sure. But what if the stock price is stagnant? Or worse, what if the stock price is on the decline? What if they've been around for so long and they're beginning to die out? Now, there are companies that have been around for years, decades, centuries, that are still continuing to innovate and still killing it. But there are a lot of companies that have, there are companies that have only been around for a couple years or even a couple months, and they're already running out of ideas. So you have to do a lot of really extensive research if you're going to go after individual stocks, whether it be for long-term growth and passive income or whether it be for short-term flip. If you're going to pick and choose individual stocks, you got to do a lot of research, and you got to make the right decision. You have to make the right decision 3 times. You got to make the right decision what to buy and when to buy it. You have to make the right decision on what to hold for the, enough time, and what to sell and when to sell. You got to be right on all three occasions. But starting about 2 years ago, 2021, or actually before I get there, let me finish talking about 2020. Spent the last 3 months of 2019 familiarizing myself with the market. The first 3 months of 2020, gaining confidence, saving up money so that I could begin investing, like properly investing. And then boom, March of 2020 happens. The end of the first quarter of 2020, just as I was confident enough to begin investing, everything collapsed, and I was able to get what I'm holding on to today. By the way, for the record, as I'm recording the video, I've never sold anything. Never sold a penny, never sold a fraction of a share, never sold anything. Everything that I've purchased, I still hold today. And my plan is to continue doing that. My plan is to not sell. Not for a very, very, very long time. But everything collapsed. And what I'm holding on to today, in many cases, I'm up 20% from where I bought during the collapse. I'm up 50%. I'm up 80%. I'm up 150%. I'm up 300% on a lot of these picks. A majority of these picks. In fact, dang near all of them are up by a lot. Some, like I said, maybe they didn't move a whole lot. Some went in a downward direction, but the majority did very well. Very well. So I was able to buy in at a massive, massive discount. Some of the biggest, baddest companies on the planet were selling for 20, 30, 40, 50, 60% off. And that's when I first started officially buying in. That's when my investment journey really kicked off. That's when I really dove in, head first. And I continued to do so. I continued buying in. Kept buying more and more and more to keep the ball rolling. A majority of the individual stocks that I was investing in paid dividends. So I would take those dividends and reinvest them right back in. If this stock right here, stock A, just paid me $5, I would put that $5 right back into stock A. So that 3 months later, when stock A pays me again, it'll be even more than $5. See, that's the compound effect right there. That's the power of compound interest. See, a lot of people see a stock and be like, oh, if I buy one share for, I don't know, $100, and it only has a 2% yield, that means I'm putting $100 in, I'm only getting $2 out of it. Shouldn't look at it like that. You should look at that as an additional $2 free worth of the stock that you're already holding. So now you don't have $100 worth of that stock. Now you have $102 worth of that stock. And then maybe by the time it pays you that $2, you're going to throw another $100 of your own money in anyway. So now you started with a $100 investment. It paid you $2. You put the $2 back in plus another 100. Now you're at 202. And guess what? When it pays you again, maybe this time you're going to have $4 coming in your way, which again doesn't sound like very much. But these are just 2 dividend payments. Most dividend payments are 3 months apart. We're not talking about 3 to 6 months here. We're talking about 10 to 20 to 30 to 40 years. Long-term vision. Imagine doing that every 3 months. For years and years and years, or decades and decades and decades. How you doing? Imagine doing that long term. Over and over and over and over. So that's how 2020 went for me. Officially getting the ball rolling. Officially diving in and buying into a majority of what I bought into at a massive, massive discount. 2021, the following year, about halfway through the year. The first half of the year, I just kept on doing what I was already doing. Second half of the year, I started to implement index funds. I started to understand the power of the index fund rather than keeping up with or having to keep up with all of these stocks, all of these companies, all of these earnings reports, all of the little intricate details of what's going on in the world and how it can affect that particular company or the sector that it's in. Like an oil and gas company, for example. You know, who would have thought the whole Russia and Ukraine situation would have happened? I didn't see that coming. If you asked me 6 months before it happened, I wouldn't have been able to tell you that that is what was going to go on. And look what it did to the price of oil and gas. And look what it did to the price of oil and gas stocks. Good God. Whew. I saw some gains that year. But little things like that. Could have went the opposite way too, by the way. Little things that are going on in the world, these little intricate details, or major events, play huge roles in what's going on with individual stocks and the industry or the sector that they're in. But with an index fund, you don't really have to worry so much. Because if you buy into a broad market index fund, which at this point is almost all that I do, every day, by the way, 5 days a week, Monday through Friday, as long as the market's open, I'm buying in a little bit every single day into 2 index funds. And every single week on payday, I contribute to my Roth IRA, which I'll get into momentarily. Because we're still in mid-2021 part of the story. My Roth IRA had not been opened up yet. Soon after, I believe, though. But I started to understand the power of the index fund. And I remember hearing a quote. Don't worry about looking for the needle in the haystack. Just buy the haystack. The needle's in there. You don't have to worry about that next banger of a stock. You already have a piece of that stock inside the index fund that you're buying into. And not only that, the duds, which are also going to be in the index fund, if they end up underperforming, they get booted out automatically by default and replaced with something that's performing better than that one. So the duds, you don't even have to worry about, oh, they're weighing me down. No, the duds that would be weighing you down get pushed out and replaced with something better. All by default, all automatically. You don't have to think about it. You don't have to worry about it. You don't even have to research it. You should. You should keep up with the trends. You should look at whether or not your index funds are performing the way that you want them to. And maybe you should lean a little bit more heavily into this one versus that one, or vice versa, or whatever the case may be. But the index fund, maximum diversification, maximum versatility, everything you know, everything you love, as long as it's a publicly traded stock, is in the index fund. Oh, you stop at Starbucks every morning or once or twice a week on your way to work. Guess what? Starbucks is in there. You don't have to worry about the stock. Oh yeah, I'm buying Starbucks all the time. I might as well buy the stock. You can do that if you want. Or you can just buy into a broad market index fund. Starbucks is in there. You wearing Nikes today? Big fan of Nike sneakers? Guess what? Nike's in there too. Oh, you don't like Nike? No big deal. Guess what? Adidas is in there as well. Did you brush your teeth today? Colgate's in there. Where'd you buy groceries this week? Walmart? Walmart's in there. Costco? Costco's in there. Target's in there. Where do you like to go out to eat? You like pizza? Guess what? Papa John's is in there. What do you drive? You drive a Ford? I do. Ford's in there. Point being is like everything's in there. Everything you can think about. Any publicly traded company that you can imagine is in there. Now you can go with the S&P 500, which is the 500 biggest, best performing publicly traded US stocks. You can go with a total US market index, which has all the large caps, mid caps. It has everything. Every US publicly traded stocks, not just the 500 best, but all of them. You can go with an international index if you have more confidence in emerging markets, like India, for example. I think India is going to be explosive over the next 5 to 10 years. And that's just one example. There are international markets. There are bond market indexes if you want to add a little bit of stability to the portfolio during rocky times. There's a total world index. Every single publicly traded stock currently in existence in there, which is crazy to think about. But when I started understanding the power of the index fund, maximum diversification, maximum versatility, the most hands-off approach you can possibly take when it comes to stocks, little to no upkeep, little to no research, it just clicked. It all made sense. So that's what I started to do. Mid 2021, I believe it was early June 2021, I started making daily contributions to one particular index fund. And then beginning late July 2021, about a month and a half later, I added another index fund to the daily contribution list. 2 index funds that I would contribute on a daily basis. And guess what? That was mid 2021. Here we are, almost mid 2023. It's been almost 2 years. I haven't missed a day. Every single day, Monday through Friday, as long as the market is open, I buy into these 2 index funds. And I started doing that in mid 2021. I didn't stop investing in individual stocks. I slowed down a little bit. In fact, not only do I keep reinvesting the dividends back into whatever just paid me, but if I see an opportunity, if I see a dip, I buy quite a bit more, if and when possible. And when I say quite a bit more, I mean that in however much I am able to. Whether it be half a share, whether it be 2, 3, 4, 5 shares, whatever I'm able to do. See, I know the way I word things probably sounds like, oh, if I see an opportunity to buy in, I'd toss $10,000, and I wish I could do that. Nope. I'll buy a fraction of a share if that's all I can afford. If I see an opportunity to buy, I'm buying. But that's basically been my approach for individual stocks over the last 1.5 to 2 years. I've slowed down a little bit, and I've pretty much gone full throttle on index funds. And right now I want the S&P 500 to be the foundation of my entire portfolio. I want the S&P 500 to be the backbone of my investment portfolio. Right now, I checked today, the S&P 500 is 5.01%. I want it to be closer to 40. That's how confident I am in index funds. Like I said, maximum diversification, maximum versatility, minimal research, effort, hands completely off, And the cool thing is you can set up reoccurring investments. You don't have to do what I do and manually buy in every day or every week or every month or however often you want to, or whenever you feel like it. You can set up reoccurring investments. The hands-off approach to the hands-off approach. You can set it up right there on Webull, like I was saying before. Link in the description if you do not already have an account. On Webull, you can set up reoccurring investments. You can schedule $50 to be taken out of your checking account every Thursday, and you can have those $50 automatically invested into a stock or index fund of your choice. Now, like I said before, make sure to download Webull and fund your account. Upon doing so, you're going to get up to 12 free fractional shares just for making your initial deposit, even if your deposit's like a penny. And if you refer a friend, by the 25th of this month, only like 4 days left, they're going to give you 6 spins. If you refer 2 friends, you're going to get 12 spins. If you refer 3 friends, you're going to get 18 spins. And you're walking away a winner no matter what, because you're guaranteed to land on something 6 times for every 1 referral that you make. Link in the description. Time is running out. Do not pass up on an opportunity. But you can set up reoccurring investments right there on Webull, or probably most other investing apps. I just happen to be a big fan of Webull. Link in the description. So moving out of mid-2021, which is when I really started to take the index fund approach, I believe it was late 2021. That's when I opened up my Roth IRA. Now, at the time, I was not working a job that offered a 401k. A Roth IRA and a 401k are kind of similar. There's one big difference: the tax part. A 401k is investing pre-taxed money that Uncle Sam has not gotten his grubby little fingers on yet, and investing, and you defer the taxes so that you're able to invest more up front, which could get the snowball rolling bigger and faster earlier, which is definitely a plus. You got to pay taxes on the gains later on down the road, but you know, so what? You got a much larger kickstart than if you were to invest post-tax dollars, which is what a Roth IRA is. A Roth IRA is investing post-tax dollars that the taxes were already taken out of. You invest them, and then the gains that you see later on down the road, tax-free. No tax. Even if you've made 50% gains, 100% gains, 500% gains, 0 taxes, because you already paid taxes before going in, which is a plus right there. So it's really your personal preference. Or in my case, it wasn't even a personal preference. I didn't even have the ability to do a 401k because my job didn't offer it. Now, I could have gone with a solo 401k, but the Roth IRA made more sense to me at the time. And to be honest, for my situation, still makes more sense. But there are plenty of people out there where a 401k would actually be better than a Roth IRA in their situation. In my personal situation, if I had to choose one of the two, I would go with a Roth IRA. But like I said, I didn't have the choice. It was basically Roth IRA or nothing at all. So I went with a Roth IRA. Maximum contribution for this year, 2023, is $6,500 for the year, which if you break that down, I believe it's $125 a week to max it out. Now, you don't have to max it out if you're unable to or unwilling to. Even if you do $100 a month, that can pay off big time. But if you're able to max it out for the year, you should probably do that. Now, funny enough, when I first opened up the Roth IRA, I was not maxing it out. I was making a monthly contribution And I started halfway through the year, and I was like, there's no way I'm going to be able to max it out by the end of the year. I'm just going to make monthly contributions, and that's just what I'm going to do. Because something is far, far, far better than nothing. That's true. It's the absolute truth right there. Something is always better than nothing. They say make sure to max out your Roth IRA. It's like, hey, maybe you can't afford to max out your Roth IRA. Guess what? It's not a requirement. You don't have to. You do not need to. You should if you can, but if you can't, don't worry about it. $100 a month, if you can do that, that'll pay off big time long term, I believe. Fast forward through the rest of that year, because I believe this was late 2021 anyway, moving into 2022. I hadn't really changed my approach until halfway through the year. So the first half of the year, similar to the first half of the previous year, hadn't really done anything different. I was making my 2 daily contributions to the 2 index funds every single day, Monday through Friday, as long as the market was open. I was reinvesting my dividends into the individual stocks that were paying me, and I'd buy in if I saw an opportunity to buy in, and I was making monthly contributions to my Roth IRA. Meanwhile, I was grinding and hustling on everything else that I was working on, the projects that I was working on, the brands that I was building, the businesses I was running, everything that I was doing, plus my job. My job that wasn't offering a 401k. Then, halfway through the year, seems like a lot of weird things happen halfway through the year now that I'm thinking about it. But halfway through 2021, and I won't go into detail about this because, number one, it's not really important. 2, it's not anybody's business. And 3, it doesn't really alter the story. But long story short, I was screwed over in a pretty big way. Nothing money related. Had nothing to do with investing. In my personal life, I was, as many would say, stabbed in the back. And in order to get my mind off of things, I thought to myself, hey, you know what? Summertime. Before you know it, September is going to be creeping up on us. And September, the month of September, notorious for horrible stock market returns. It's called the September effect. It's the worst month of the year, almost every single year for stocks. And I remember I completely forgot about it the year before. And I remember saying to myself, at the end of September 2021, okay, August of 2022, I'm going to make sure that I'm saving every penny for the entire month so that I can dive in extra in September. So here I was, I think it was maybe July of 2022, and I thought to myself, hey, you know what? I'm going to get another job. I'm going to get a secondary part-time job for a couple different reasons. Number one, and arguably most importantly, to get my mind off of things. To distract myself from what was going on. And 2, the bonus, the cherry on top, it would add to my income, it would add to my active income so that I could invest as much as possible in September. I can get this job, it's July, I can get this job in July or going into August. Actually, it was early August at this time. I can get this job early August, work my face off for the month, invest all of it in September, and just keep it going and ride till the wheels fall off, until I no longer want to work this secondary part-time job anymore. Maybe ride it out to the end of the year. I had known, one of the reasons I applied for the job that I applied to was because I knew that their lease was up and everybody was getting transferred out. So I was like, oh, that'd be perfect. I'll hang out, I'll work, I'll collect a secondary paycheck until the lease is up, and then I'll resign and just go back to what I was doing before, which is what I was still already doing, working my other job. Just a temporary part-time job. That was my original intent. Sure enough, my first week manager came up to me and said, "Hey, you're doing a whole lot better. You're learning a whole lot quicker than the other guys that we have. Would you consider full-time?" I said, I would consider it. I would absolutely consider it. It's never crossed my mind. This is a temporary part-time job, not something that I was really interested in making a long-term full-time commitment to. And plus I have a full-time job. What am I going to do about that? Went home, thought about it, slept on it, thought about it some more, weighed out the pros and the cons. I was like, all right, I'm already working a full-time job. Gonna be honest, the full-time job I was working on at the time, really starting to hate it. But it's all I knew. I've been doing it for so long. Been doing it for most of my adult life. Years and years and years in this particular field. Finally worked my way up to a point where I, like, all right, this is good. And if I can keep the ball rolling, and if I can keep moving in the right direction, it'll give me everything that I originally wanted. But this new job, if I were to go full-time, would come with some perks. It would come with some benefits. Health insurance, vision, dental. My other job wasn't providing that. A little bit less money-wise, if you were to compare the paychecks. All right, what does 40 hours here look like versus 40 hours there? My other full-time job, my original full-time job, actually paid more. Until you factor in the Sunday pay. And the, I don't want to say guaranteed overtime, but almost guaranteed overtime. If you factor all of that in, I actually am making more. Because my other job, if you go over 8 hours, that's it. You're still just getting your normal rate. If you work on a Sunday, you're getting paid the same amount of money as if it were a Tuesday. So that was a plus right there. I was like, all right, well, I can get some overtime. I can get Sunday pay every single week. Health insurance, vision, dental. This was a union job, and I'm going to keep my opinions to myself about unions. I'm personally not the biggest fan, because they protect the good people, yeah, but they also protect the bad people. But guess what? I'm a good person. So, there's another little perk right there. Side note, my plan is to leave the union. I don't know exactly when, but I'm basically as high up as you can go in the company while still being in the union. Any step above where I'm at would make you an exempt, and you leave the union for that. So my next promotion will be a non-union position. Anyway, not only that, they offer a 401k once you hit a year. And guess what? I'm coming up on a year, and I already made the decision that I'm going to be making contributions. I don't know what percent I'm going to go with just yet. I don't know exactly what I want to do, but I looked at a couple different plans, and I figured out one that I think makes the most sense for me, especially because now I'm not looking at this as a temporary part-time job. This is a full-time job that I am making a long-term commitment to, or at least I plan on it at this time. I could see myself being with this company for the next 30 years. But like I said, I weighed out the pros and the cons, and I made the decision. All right, this is what I want. This is what I want to do. I want to go full-time here. And then as for my current full-time job, speaking, in summer of 2022, I was like, as for my current full-time job, I'm going to step down and do that part-time. And good thing I did, because like I said, I was really not enjoying that other job. Really didn't like it. I'm a big believer in the fact that, like, you don't, you know, people say, oh, I need a job that I like. I need a job that I love, a job that I'm passionate about. Screw that. That's all nonsense. You need a job that covers your bills. That's what you need. Oh, but it doesn't make me happy. Well, your hobbies make you happy, and do that when you get out of work. Do that on the weekend. Do that on your days off. Always, always, always strive for more, and use the money that you make from a higher paying job that maybe you don't love to fund a business or fund your investments or to fund a hobby that you want to start or something that you would actually enjoy. It's called work for a reason. It's not called playtime. The 40, 50, 60 hours that we all spend at work every week, it's not supposed to be the most fun you've ever had in your life. It's got to pay the bills. It's got to create currency for you. That's active income. And if you're going to be breaking your back for currency, make sure you're breaking your back for as much currency as possible. Anyway, good thing I did step down from my full-time job down to part-time, because it was driving me up the friggin' wall, if I'm going to be honest with you. And hey, I found something better. I found something that technically pays a little bit less, but when you factor in the overtime and the Sunday pay and holiday pay and all the benefits and whatnot that come along with it, I'm actually walking away with a whole lot more. And the 401k, forget it. Way better decision. So that's what I did. It took until the end of October for HR and all them to confirm and approve of the full-time application, but I got it. Now I'm locked in, and they can't get rid of me. They don't want to get rid of me. I'm a breath of fresh air. And I don't say that to pat myself on the back or anything like that. I've been told by so many people, and I've worked at a couple of different locations. I had my home location, which, like I said, the lease was about to be up, and then everybody was getting transferred out. I got sent to another place for training. I get sent to another place for more training, and then I got sent to my new location, which I believe is going to be my permanent location until I get a promotion, and then they'll potentially place me elsewhere. But either way, I think I'm where I'm at for at least a little bit of time. And everywhere I've gone, I've heard the same thing. Man, you work hard. Man, they finally got someone that actually works. Man, you're so much better than the other guy. Man, you're so much better with the person that you replaced. Man, you're so much better than this. Oh man, you're a breath of fresh air. Man, you are an asset. They're a liability. See, I'm not good at many things, but there's one thing I am good at when it comes to, workplace environment. Something that I'm capable of is increasing the level of productivity. And it's very obvious. And I know how to motivate a group of people. I know how to talk to people. I know how to create and maintain momentum. And I know how to get the slackers to at least pull some of their own weight. But the reason I got this second job in the first place, secondary part-time temporary job, was just so that I would have more money to invest, or more money being made in August, so that I could save that more money and then invest it in September. And guess what? That's exactly what I did. September of 2022. Surprise! We had another September effect. What do you know? What are the odds? Almost every single September ever, stock market is deep in the red. And that's exactly what the case was this past September. In a couple months, 4 months, 4 or 5 months, it'll be September again, and I'm looking forward to it. Anyway, skipping past the rest of 2022, because I was more so focused on my job, training, making more money, saving more money, and investing more money. Hadn't really changed up my strategy all that much. Until January of 2023, this year, I decided, you know what? I'm making more than I was. I've gotten like 2 promotions, 2 or maybe 3 pay raises in the last couple of months. I'm still working my other job part-time now, but that's an additional paycheck. I'm making a little bit more, doing a little bit more, working a whole lot harder, and the hard work's paying off. So early 2023, a couple months ago, or actually toward the end of 2022, I decided 2023 I'm maxing out the Roth IRA. That's what I'm going to do. Now, like I said, to max out your Roth IRA for the year, $6,500. Now, you can take $6,500 and drop it all in there today if that's what you want to do. I find investing fun. I find the purchasing of stocks and or index funds, I find that fun. That's a hobby to me. Investing is a hobby. I enjoy it. I like it. Which is why I haven't set up automated investing or anything like that. I like to do it manually because it's fun. I enjoy it. So, every single week on payday, I make a weekly contribution into the Roth IRA, my retirement account. It's broken up into 4 different index funds. Now, I like to keep a majority of my personal stock picks and index fund picks to myself, just because I don't want my words to be misconstrued as though I'm telling you, oh, this is what you should be investing in as well. No, that's why I keep a majority of that to myself. But my Roth IRA is made up of 4 different index funds. And it's a 40-40-10-10 split. 40% going into one, 40% going into another, 10% going into another, and 10% going into the last. That's how my Roth IRA is set up. That's how I decided to set it up. It's 100% customized by me. I decided what I wanted to invest in. I decided on the allocations. I decided on absolutely everything. And this year, I'm making a weekly contribution every single week, every single payday, so that by the end of the year, I will have maxed it out. That's the only real difference this year for me that I can think of. And once I hit that 1 year mark, I can start making contributions to my 401k. Like I said, I don't know what the percent is going to be. I think a lot of people do like a small percent, 3% or something like that. So if most people do 3, I'm thinking about maybe doing 5. I don't know how realistic 10% would be, but it's a pretty big chunk of your paycheck being taken away for a good reason, but kind of need my currency for other things. But I definitely want to get that 401k launched when I hit that 1 year mark. And I'm going to be making obviously weekly contributions through my paycheck without me having to do anything. It'll just be, let's just say 5% taken out of my paycheck before taxes and put into the fund. While simultaneously continuing to invest in my Roth IRA. So I'll be technically making weekly contributions into 2 different funds. My 401k automatically and my Roth IRA manually. 2 completely different retirement accounts. While also continuing to make daily contributions into those 2 index funds that I mentioned before. 2 different index funds in my regular investing account, not a tax deferred or tax advantaged retirement account, my regular investing account. 2 index funds. I buy in every single day, Monday through Friday, as long as the market's open. Maximum diversification, maximum versatility, and like I said before, man, I'm losing my voice over here. I brought the G Fuel. I didn't bring the the actual beverage. Can't consume this. Like I said before, if anybody wants to try this right here is one of my top 3 favorite flavors. $5 off first order by clicking the link in the description. But that's basically what my investment strategy is at this point in time. Index funds, for the most part, in a couple of different ways. My 2 daily contributions, my regular account, weekly contributions into my Roth IRA, maxing it out for the year. And in a couple of months, I'll be hitting a year at the company that I work for, and then I'll be making contributions every single week into the 401k. So I understand that I do things a couple of different ways. I use a couple of different platforms. Like I said before, the main one that I use and the one that I like the most is Webull. Link in the description if you don't already have an account. If you open up an account and fund your account, even as little as a penny, they're going to give you all the way up to 12 free fractional shares just for doing so. And for every friend you refer, for the next couple of days, they're going to give you 6 spins. Refer 1 friend, they're going to let you spin this thing 6 times, and you're going to win 6 different prizes. Or maybe 6 of the same prizes. Or maybe it'll be mixed up. But anyway, you have 4 days left to do that. You're running out of time. Webull link in the description. Do not pass up on an opportunity. But that's basically why I invest and how I got started investing and what my approach has been over the years and how things have evolved for me, how my strategy has changed over the years for a variety of different reasons. Number 1, because of things happening out there in the world, and also 2, some of my, I don't want to say my goals have changed. I don't believe my goals have changed, but the vehicle I'm using to take me to my goals has changed or been tweaked, been altered a little bit over the years. Similar approach, similar everything, but I realized that maybe doing things in a slightly different way would be a little bit better. How do I maximize diversification? How do I maximize versatility? How do I minimize how much time, energy, and effort I'm putting into thinking about this and researching about all of this? How can I become as hands-off as possible while still continuing to manually invest just because I enjoy it? I just don't want to put so much thought into it. I don't have to want to worry about earnings reports and all this reading and research. Good God. Accidental plug, $5 off your first order. Click the link in the description. But at the end of the day, my why is to achieve financial freedom. I want to get myself to a point where I'm making enough money passively that I no longer need to be making any money actively. If you're making, let's just say, $1,000 a week at your job, imagine investing little by little by little by little by little by little by little to eventually get to a point where you're making $1,000 a week passively. Whether you're at work or not, whether you're doing anything or not, whether you've gotten out of bed or not, $1,000 a week are being made. And you can do one of 2 things at that point. You can continue working your job, which is what I would do, by the way. I want to make enough passive income to no longer need a job, but I wouldn't quit my job. But if you're making $1,000 a week at work, and you get to a point where you're making $1,000 a week passively, guess what? Now you're making $2,000 a week, and you're only breaking your back for half of it. The other half is coming to you like magic. But you don't have to start with such a crazy number. You don't have to be like, oh man, I need to make $1,000 a week. Because no, that's going to take a long friggin' time to do. That's going to take a lot of money. That's going to take a lot of investing. I'm nowhere near that. Nowhere close to that. But you could set a goal for yourself. If you are a passive income, dividend income investor, which is what I am, I guess you can say that I'm a passive income index fund dividend income investor. You can set a goal for yourself. You can figure out what you want to invest in. You can figure out what the dividend yield is. Let's call it 3%. A 3% dividend yield in an index fund or a stock that you chose. You throw $100 in. That $100 that you threw in is going to generate you $3 a year. So at that point, you can start doing the math. Okay, $3 a year. If I multiply my investment by 12, I'll be making $3 a month. Okay, now that I'm making $3 a month, how do I make $3 a week? How do I make $3 a day? Every day. Passively. When you get to that point, say, okay, how do I make $5 a day? How do I make $10 a day? How much do I need to invest to be making $10 every single day without actually working? Whether you're working or not, $10 are still being made. You quit your job, you're still making $10 a day. And you can keep raising the bar. That's what I recommend. That's what I suggest. I don't think you should say to yourself, man, I got to become a millionaire. Oh, man, I'm not a millionaire yet. Now I'm discouraged. I don't think you should set the bar that high. That should be a goal of yours. You should have big goals, but you should also have smaller or medium-sized achievable goals. What can you achieve by the end of this year? We're already almost halfway through the year. What can you do if you start today? What can you do to realistically, where can you realistically get by the end of this year? Where can you realistically get 5 years from now? That's where the focus should be, in my opinion. That right there. I don't think you should be, I don't think it should even be crossing your mind or desperately taking action. Oh, I gotta rush to become a millionaire. I need to have $1 million portfolio. I need to be making $50,000 a year passively. It's a good goal to have. It's a fantastic goal to have. But I don't think that's where all your time, energy, and effort should be spent. I think your time, energy, and effort should be spent at work, number one, and also working on yourself, working on your business, working on what you need to do, working on your skills, building up your skills, providing more value to the marketplace, becoming more valuable to the marketplace, and in turn making more money. That's what the focus should be. See, a lot of people say, oh, active income, blah, 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 versus passive income. Yeah, your focus should be on active income. Absolutely, 100%. You need to increase your active income, because the more active income you make, the more active income you can save, and the more active income you save, the more active income you can invest, and the more active income you invest, the more passive income you generate. Everybody likes to hate on active income. Everybody says, oh, a job, J-O-B, it stands for just over broke. Quit your job, become your own boss. No, work harder. Take that overtime. Look for that promotion. Ask for that pay raise. Make more money. Fatter paychecks means that you can save more. Don't be a victim of self-inflicted lifestyle inflation. Screw that. Make more money. Spend less money. The more money you make, the less money you should be spending, in my opinion. Make more, spend less, save it, invest it, rinse and repeat. Anyway, that's been another hour-long episode of what's going on in my mind, why I invest, how I invest, what got me started in investing, how my investment strategies have changed over the years, and basically what some of my goals and missions and whatnot are. I want to keep hitting small, achievable goals and continuing to raise the bar. As always, if you guys like today's video, please hit that like button. Subscribe if you're new. I post new videos all the time. Also, make sure you subscribe to my second channel, which is my backup channel for exclusive bonus content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. T-shirts, hoodies, stickers, coffee mugs, and a bunch of different designs. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. Over 50 different flavors to choose from. This right here is definitely in my top 3, and it's going to be the flavor of the month for May 2023, according to this guy right here. And last but certainly not least, like I said before, make sure you download Webull and fund your account. They're going to give you up to 12 free fractional shares just for doing so. Even if you fund it by a penny, it still works, it still counts, you still get your up to 12 free fractional shares. And for every friend you refer one person, they're going to give you 6 spins. Or for a second person, they're going to give you 6 more spins. And you're always landing on something. You're going to be winning different amounts of free Apple stock. Maybe you'll get a couple dollars worth. Maybe you'll get a couple $100 worth. Maybe you'll get a couple $1,000 worth. Or maybe you refer 2, 3, 4, 5, 6, 7 friends and get 6 spins per referral, and you rack up a whole bunch of free Apple stock, which you can then take and hold on to if that's what you want. If you want to hold the Apple stock, or if you want to sell it, cash out, and use the currency to buy something that you actually want. Webull link in the description. Time is running out. This particular promo ends on April 25th, and I believe this video is coming out on the 21st. So 4 days left. Make the most of it. Work hard, work more, make more money, save more money, invest more money, turn that active income into passive income. Thanks everybody for watching. See you next time. Don't you dare stop smiling. Peace.